So it's very important to first state that the positioning in precious metals is the correct one. We're in a debt-based collapse, and we have witnessed an extended spell of fiat devaluation on all the fiats, but the dollar's been one of the worst. This followed a 55% correction in the debt markets from 2020 highs over the course of the last 5 years. We described the escalator up, the 40-year bull, and the elevator now down on the debt markets. And we also remind everyone that it's a debt fiat system. The two are synonymous. I sometimes use a Siamese twins, children joined at the head. You can't drown one without pulling the other under the water as well. And that's why you're seeing fiat debasement, which is why cost of living is getting disorderly for folks in the States. There's a lot of complaints there. So let's just recap on data, and then we'll come to why I think there just might be a pause and a little bit of sideways and maybe some corrective price action in a minute. But I don't want people to miss the prime story, which should be retained, and that is on the long run will be surge. So this is a technical comment on a lower time frame that I'm making, whereby we've made a good a key level, but long run fiat's debasement, this is really only the beginning. Go and do the Dow Jones divided by silver miners for yourself, or if Elijah would like me to, I'll do one or two of those cost valuations. Miners are really early in the cycle, silver's very early in the cycle, etc., etc. Can I start with gold and deal with that technical pause moment, Elijah? Because I'm kind of the charts guy. It's what everybody who comes to expect. We trackers, and we read the footprints in the sand, basically. That's our primary goal. So we just had an amazing run. Our community and I were aggressively leveraged long here. So we are investors, but we also try add a bit of extra spice on that by getting leverage long. And we got leverage long in and around the 3340s, 3350s, 3360s with multiple entries. And you have just made a key technical target for us at the 3,769. This is our bespoke favorite setup. It's called the HVF setup. It's a squeeze in volatility. It's the Hunt volatility funnel method, and this is what we love to trade. And in bull markets, you consistently get them. So it's a very useful way to turbocharge your stacking, providing you can implement safely with real stop losses and the hyper over symmetric, the asymmetric gains. You accelerate your ability to stack. And this has got a lot of our community members who are banking over 6 digits, 1 or 2 more. Others at lower levels are making just good profits for the first time in trading. I'll just highlight. So here was the run. You made our interim target there. That's your point of rest. You got a red candle there and a pullback. Then you went into this broadening structure. Many people see that as weakness. And in actual fact, when you are inside an HVF play zone, which is after this triggering point on the green line and waiting for target, it's actually bullish. You popped out the top, and now you've done that. And these two candles, a little bit of a wick sell here, you can see back down, and we've got a red candle also with an upper wick sell. So a little bit more sideways and possibly down now for a spell before opportunity. So if you were just about to put $1 million into miners, you might get them priced a tad cheaper if you're patient. But don't stop getting those miners. Don't stop getting that gold, silver, and platinum. But from a timing perspective now, we've just done. We expect progress decay. That's what a target's meant to be, a localized high where you get a rest and a little bit of pullback. And you often create new structure. So an example of what could happen, it's just one of many. It's not a prediction, by the way. You could come down a bit, you could swing about a bit, you could come down a bit, you could calm down, and then some data comes out, and then you go again. So for those that are stackers with physical, there's no action to take. For people that are more trading with CFDs and things like that, you might want to bear a bit of awareness to that. Also, everybody's become super bearish the dollar, and we were too, and we were right to be. But there's sign that the dollar against the other fiats, and even here on gold, will have a little bit of pushback. I'll just highlight the monthly. You can see how the dollar has underperformed relative to the euro, another failed fiat, of course. Let me just remove that. Sorry, that box. We don't need that. It's jumped on. You can see how you've had over the last few months. I mean, literally, this is January, February, March, April, May, June, July, August. I think I started, or that should be January. So forgive me, I started one after. So we're in the September month now. But you can see we've sold off there. And that's a little bit like a shooting star. And most of these were big, stretchy upside candles with deval of the dollar, up valuation of the euro, which has all of the same problems in many senses. A lot of people are more familiar with the Dixie, which is actually the same thing but upside down a little bit. It has a bit of Japanese yen, Swiss franc, and Swedish krona in it to small degrees, but it's 52% still the euro. And you've had a little bit of a reversal after making a marginally lower low and coming back up. It's too much. It's only one swallow. We don't call a spring or a summer on that, but this was very capitulative. And there's a possibility that, you know, a little bit of a rally and a little bit of comebackings of the dollar might be on the cards, because a lot of the other trading nations that have surpluses to the dollar, mainly China and the Eurozone, you would have had quite a lot of a correction on importers with a combination of the tariffs and the currency effect already. And they'll be squeaking about currency manipulation soon if the dollar continues to go down and they can't sell to any meaningful level anymore. So that's a kind of small time frame, medium time frame technical perspective. It's not the time to rush in and get leverage long now that everybody's super excited about it. But we've had an amazing spell, and it will continue when we go back up to the much bigger time frames. You can see that on the monthly time frames, let's clean that face, that this is still part of a very, very big macro bull market that is really just getting its boots on. But timing does matter. If you want to hold the position, you don't want to get in at the worst localized point, because people don't have the patience and they get out if they're sitting with losses for too long. So yeah, let me leave it there. Yes, we did. In fact, I think we tweeted yesterday. Let me just bring it up. I've still got the chart quite close. This is on a quarterly chart, and I annotated and drew this. And the point was that you never, despite we trading up to very close to 50, and I think in 2011 we might have traded almost 50, depending on which broker platform, we never held it for a quarter. We never held it. This is actually the lip of the cup, the candle bodies, this line over here that I'm sort of making thick. And if we're only 6 days away from the end of the month, or 7, but two of those are a weekend probably. So there's only 5 trading days left of the entire quarter that ends September, which is Q3. So we're ending Q3 of 2025 right now. Silver would have to come a long, long way down in the next 5 trading days for this not to be the breakout quarter. So congratulations. We're sharing it all together with all your viewers and people that support Miles Franklin. Keep stacking. You've just triggered something on a far larger time frame. I highlight that one candle is an entire quarter of a year. That means 4 of them is a year. You've just had, this is the big cup and handle, beautiful rounded bottoms on the handle and on the main cup. You've just triggered that pattern, which has a very, very big target to come. So we on that point, we've spoken of the upside HVF at $330 as the final, a target, not the final high, but a target where we might expect further rest on the quarterly chart. So Elijah, on that silver chart, this is the setup that has triggered for us. So we were talking about the cup and handle. Traditional technical analysts do cup and handles. We actually have an upside HVF in this, which sees you get in earlier with a type of stock, which sees a greater reward. And you'll even see a squeeze within a squeeze here. So the actual entry is down here we highlighted on, this is a quarterly chart, again, reminder, we highlighted when you first chipped the wire on the main pattern, but actually we were already in long leveraged and you'll stop there. And the gain is up to $330. That's a huge move. This is, as I say, a very big time frame view. It's a massive risk reward, 23.91, my apologies, 23.91. But if you had actually got in here, it's actually even better too. So we were saying, look, this is the point for longs. This is some time ago. We were on your show talking about this. And we've done this divided by the CPI AU CSL as well, which is the alleged inflation rates. Let's just get that risk reward. So this is an amazing chart. That's where you can see 1st of Jan 2025 was the first time you broke the green line, the triggering event for us. And since then you're up, and you're up at 44.15. I point out that there's a kind of 47, 69, 48 blue line here, which runs through those highs, but it shouldn't be. If it has a pause, it shouldn't be excessive, and it's not guaranteed that it will. It's run our first interim target. The next target is up at $90. People will be looking very forward to that because they'll be on the doorstep of 3 digits. And then we're going a whole next level of up. Again, just bear in mind, having just run that first interim level target, the remaining few days of the month, we could come a little bit back. As I mentioned with gold's the king, and silver still needs to be permissioned to run by gold to a degree. It will independently run to a degree, but not too much. If gold comes off a fair amount and starts to be a little bit staid and a little bit more lackadaisical for a while on price behavior, then silver will slow. And the $50 gateway is a very important point. We talk a couple of times, we use our catchphrases with you once, twice, and then on the cup and handle part 3 times, and then we say the 4th time is the lady, the one that breaks. So we could still see the possibility that when you get into this range where you were rejected here, those wicks, you can see those are rejections, that you might get a similar degree coming in the early weeks of October, maybe a bit of a rejection. I don't think it goes far, and I think then you go again, and then that's the big break. That's the one that will take you into triple digits, and we are pretty high confidence on this. It's a good setup. It's a long-term setup. It's one we've been watching for absolute ages. You could have been long from 30. You would already be now $14 to the good. That's almost 50% on your leverage trades if it's 45 in a few weeks. And you would have had a SOP. And if you had started down here, you would have been in even sooner. You would have been in the 28s, 29s, and your stop would be even tighter. So you are in a breakout, fast-moving HVF trade in silver, and our expectation is 330 will be the next major target resting place for this time frame under review, which, bear in mind, is a very macro time frame. So things unfold slowly if you're watching it day for day. But when you look back over the months, you go, wow. A bit like when I was showing you the gold chart on that quarterly time frame. It's just mainly up, really. Even with the periods, the 3 years since 21 where we went sideways, it's mainly up.